Hi, my name's Mike Santo, and I'm a tax manager here at MacPage. Today I'm here to talk about a common pitfall that many taxpayers find themselves in, especially in today's age, and that is having a filing requirement in another state. What makes this such a common issue today is because of the internet. You can do so much from the comfort of your couch and sell to everybody all over the world if you wanted to. Also, states are looking for revenue, so they're doing everything they can to get that money. And many taxpayers, because of this, find themselves in this pit hole. 3 reasons why they might be falling into this pit hole is because every state has its own set of taxes that they impose on taxpayers. Maybe even hundreds of taxes exist out there. We're talking about income tax, sales and use tax, property taxes, franchise taxes. I can keep going on, but you get the idea. There's a ton of different taxes out there, and each of them have their own requirements on when you're subject to them and not. And because of this, what is okay or what makes you taxable in one state or not taxable in one state may be the complete opposite in another state. Additionally, these states, they're changing their laws every year. So your business may be the same as it was last year, and last year you weren't taxable, now this year you are doing the same exact thing. Lastly, what kind of business are you doing? Are you in the service industry, or are you selling tangible goods? Do you have physical locations around the states? Or are you just working in one state? Also, how are you interacting with your customers? What are you doing with them? You may think you're just selling tangible goods, but you may actually also be doing some services that would subject you to state and local taxes. So you may be asking yourself, well, if I never entered the state, how can that state tax me? And unfortunately they can. The states have rules and regulations revolving around that, and fair or not, they focus mostly on the fact that you're providing goods or services to their residents, so they deserve a cut of your profits. For example, a lot of people up here in Maine may not be thinking that we're traveling or doing much business over in Washington, complete opposite side of the country. Well, Washington has a law revolving sales and use tax. Even if you've never entered their state, all you're doing is selling product or providing services over that way, you may be subject to their sales and use tax reporting requirements. At $10,000 of sales to Washington, you're subject to this. And if you aren't doing everything Washington wants you to do, you could be subject to about a minimum of $50,000 in penalties. That's a pretty hefty fee for just $10,000 of sales. Can you get out of that because you didn't know? Possibly. But some states say no. Again, it all comes down to every state's a little bit different than the other. So, best way to avoid this is talking with your CPA, making sure your CPA knows exactly what you're doing, how you're providing your services, how are you selling your products, who are you selling your products to? Are you selling it to people in Maine? Are you selling it to people in Massachusetts, California, Hawaii, Alaska? Make sure that you've worked over your business plans and your business strategies with your CPA before jumping the gun and starting to do something that may have some significant tax consequences down the line. Thank you, and if you have any more questions on today's topic, please don't hesitate to reach out to me. Again, my name is Mike Santo, and my email is mjs@macpage.com, and my phone number is 207-512-3438. Thank you.